Start the show with last hour calls. Mitessh Thakkar is joining us for that. Mitessh, hi, good afternoon. Been a good day, especially on the bank nifty, though off the highest point right now. What would be your call on the index and your stock calls?
Yeah, Anuj, good day. Yeah, I think the Nifty also has come off the day's high a little bit and now trading below the opening point, which is not the case with the bank Nifty. So the banking index still is outperforming. But broadly, as I said, this market isn't, getting back into the movement which it was showing a couple of weeks back, which is basically a very strong uptrend when it was continuously making new highs. I believe that we have this consolidation coming up now, and therefore I think around 17,800 is what I was looking at. Possibly we see the higher end of the market, but I think it's made a high of 17,725 and then tapered off from there. So maybe I think a few more days of consolidation will be required before we actually regain or restart the up move. For the time being, traded stock specific biases. I have a buy on Crompton. That's a stock which is broken out above the 200 average, above some consolidation. It's a buy with the stop at about 403 for targets of 435. And Canara Bank, amongst the banking names, is on the recommendation list as well. That's a buy. Keep a stop below 233 actually, and look for a target of 256.
Crompton is interesting. Crompton seems to have broken out, it's a big move today. Not on too much volumes though, so we'll see how this one pans out. Prakash Diwan is with us to take us through what he's making of things. Prakash, thanks very much. Good to have you with us here as always. Let's just pick on Crompton, if you cover that space. Not cheap. Some 30 times FY24 earnings for some 10% growth. Would you look at this? It's breaking out today, as Mitessh was also pointing out. Any thoughts?
Yeah, hi. Good afternoon, Prashant. So, I think it's the second order impact of the kind of move that we've seen in cap goods company. Now it kind of will start moving on to some sort of companies that straddle engineering and consumption. So this is bound to happen. And what's interesting is that Crompton has actually been very strong in terms of all the product portfolio that they've built over the last many years. They've deepened their presence and market share in all of them without probably too much of A&P cost incurrence. In fact, it's very simple for most of these consumption names to grow by spending a lot on advertisement and promotions and things. And this is one company that has done it very quietly, very effectively. So if you look at that margin profile that they've been able to improve and maintain over the last many quarters, it's fairly impressive. But yes, as you said, it is expensive. Things like this only start fetching a higher premium. The valuations are not so comfortable that you would still make some money from here on. But it's a great long-term bet that's playing out the way it was anticipated. There'll be no disappointment, especially when others like Havells and some of the other names are probably struggling because of the input price pressures. Crompton has managed to do that given its long-term arrangements with vendors and the ecosystem as a whole. So I think it's a great company in that space, but it is expensive. You pay a price because things are looking better than the others, and that's why the disparity in valuation also will probably be stuck.
Okay, Prakash, good afternoon. Would you give a second chance to RBL Bank? Worth a bet or just stay away?
Good afternoon, Anuj. So I think it's been something which needed repair, and I don't know if in the first place what was terribly wrong with it, except for the fact that there were certain regulatory issues that could have probably snowballed in very simple terms, I must say. But that's been kind of clipped at that stage when nipped in the bud or whatever, and things probably could start normalizing for them. They've had certain setbacks with Bajaj Finance, the card business, probably looking at on its way out, and some of the fundraising plans would probably make sure that the balance sheet gets a bit stronger. So there are lots of triggers that we've heard of, but I wouldn't. Banking is giving such a lot of opportunities, and Anuj, you know about it. It's probably the sector to be overweight on at this point in time, and you have much to. There's point for choice actually. Even if you want smaller private sector banks, there are many which are far superior. In fact, if there is repair that you want to buy into, IDFC First is probably better than anything else at this point in time, given all the stuff that they've done. In fact, nobody believes it will do well because it's been talking about. I mean, there's been expectation around it. It hasn't happened, but that's precisely the reason why people are giving up, and there's an opportunity. So RBL Bank, I would pass. A large pension fund can do it because they have a very different allocation methodology. But with scarce capital, I would look at something much more definite.
Okay, all right, Prakash. Since it's F&O.